discuss ways you can save up money before retiring in the Philippines. Many American retirees find the Philippines to be an attractive retirement location because of its mild climate, stunning scenery, and reasonably priced cost of living. The Philippines offers Americans a chance to increase the amount of money they have saved for retirement because of its cheaper healthcare, housing, and daily expenditures. To guarantee a financially stable retirement overseas, one must think about efficient saving techniques before making the leap. In the Philippines, Americans can save for retirement in the following useful ways. Number one, establish specific financial objectives. Find out how much it costs to live in the Philippine area of your choice. Rural places are less expensive than major cities like Manila and Cebu. In the Philippines, one might need $1,000 to $2,000 a month on average to live comfortably in retirement. Rent, groceries, medical care, and entertainment will all be covered by this. Unexpected costs could come up due to medical conditions or travel requirements. It's crucial to set aside an emergency fund equivalent to 6 to 12 months worth of costs. Number two, make the most of retirement account contributions. Try to contribute as much as you can to an employer-sponsored 401k if you have access to one, particularly if the employer matches your contributions. Your savings will increase dramatically as a result. The IRS permits you to make additional contribution to your 401k and IRA if you are over 50, which can help you save more money. After-tax money is used to fund contribution to a Roth IRA, which permits tax-free withdrawals upon retirement. If you intend to retire in a nation with a lower cost of living, such as the Philippines, this could result in a large tax savings. Number three, reduce significant costs in the United States. For many Americans, housing is a significant expense. Think about renting or selling your home and relocating to a smaller, less expensive location. Your retirement savings can be greatly increased by the proceeds from the sale of a home in the United States. Expenses can be decreased by selling a car or selecting a less expensive one. To reduce gasoline and maintenance expenses, carpool or take public transit whenever you can. To reduce premiums, consider combining health savings account with high deductible health plans. Additionally, health savings accounts provide tax benefits that may be useful in retirement. Number four, limit discretionary spending. Reduce non-essential spending on things like entertainment, eating out, and upscale shopping. You can save more money for a nice retirement overseas by leading a modest life in the United States. Examine monthly memberships and subscriptions to things like publications, streaming services, and fitness centers. Every year, hundreds of dollars can be saved by eliminating or cutting these. Doing it yourself instead of paying professionals or buying proceeds items can save money on home repairs, projects, and even small-scale gardening. Number five, make use of passive income sources. If properly maintained, rental properties can be a great way to generate passive income. The Philippines' living expenses might be covered by the monthly income from rental properties in the United States. Invest in stocks that pay dividends and generate consistent income. Reinvest in dividends throughout your pre-retirement years can boost long-term growth, and distributions can be used to augment your retirement funds. For better returns, several platforms let you lend money directly to people or small businesses. Some Americans find this choice useful as part of a diversified income strategy, despite the fact that it is riskier. Number six, invest in accounts that are friendly to foreign countries. You can guard against currency changes by opening an account that offers advantageous exchange rates, like in USD and Philippine pesos. Locate a financial advisor who is knowledgeable about planning for expats. They can assist in creating a budget appropriate for living abroad, maximizing investments, and lowering tax obligations. Number seven, Move to a lower cost US location pre retirement. You can save more in several states because of their reduced living costs and tax rates. Because there is no state income tax in states like Florida and Texas, there may be more money available for savings. If you can't move to another state, think about moving to a less expensive area. In the Philippines, lower rent or mortgage payments can help you save more for retirement. In order to earn extra money that can be stored for future needs, many retirees begin renting out a portion of their houses or an additional room. Number 8, create a strategy for healthcare. Tax-deductible contributions, tax-free income, and tax-free withdrawals for approved medical costs are all permitted under HSAs. Because HSAs never expire, money saved there can be used to pay for retirement medical expenses. Remember that Medicare often does not pay for medical care received outside of the United States. You may need to get expat or foreign health insurance. With numerous physicians with U.S. training, healthcare costs are lower in the Philippines. Examine health insurance plans that provide coverage for Philippine private hospitals. Number 9, take advantage of U.S. Philippines financial agreements. Through a totalization agreement, retirees from the Philippines and the United States can combine their labor credits to be eligible for Social Security benefits. To prevent double taxation, the Philippines and the United States have a pact. By doing this, you can prevent the Philippines from taxing your income generated in the United States. The exchange rate between the US dollar and the Philippine pesos is subject to fluctuations. Move funds to your Philippine account to benefit from advantageous exchange rates when the dollar is strong. Number 10, examine your options for Philippine residency. For international retirees, the Philippines provides a special resident retiree visa, SRRV, which permits numerous admissions and an indefinite stay. You can establish a financial presence in your new nation by investing the necessary deposit for SRRV eligibility in the Philippines. Moving money between the United States and the Philippines will cost less if you use international money transfer services with affordable fees and good exchange rates. Number 11, reduce debt prior to retirement. High interest debt, like credit card debt or personal loans, might reduce retirement funds. Early debt reduction or elimination will increase available funds for savings. Retirement objectives may be impacted by taking out new loans for luxuries or non essential expenditures. Restrict large purchases or only finance them when absolutely required. Refinance it at a lower rate could lessen monthly payments if you are still making mortgage payments, giving you more money to save. If you intend to sell the property before retiring overseas, this is really beneficial. Number 12, create a retirement budget and stick to it. Compute the expected monthly cost for accommodation, medical care, food, utilities, and domestic transport in the Philippines. Track spending and save money by using budgeting tools. To preserve your funds, make the necessary adjustments to your budget if any anticipated expenses unexpectedly rise. Try living on your expected retirement budget for a few months while you're still in the United States. This test run can assist you in modifying your spending patterns and financial expectations. In summary, with a sound savings plan and a practical attitude, retirement in the Philippines can be both economical and satisfying. To increase savings, make retirement account contributions a priority. Cut back on wasteful spending and purchase assets that will generate income. Many Americans may retire in the Philippines with careful planning, sound financial management, and well informed choices. All right, folks, that is all for today's show. Thank you all for watching. Until next time, Have a good day.